Hi, how are you? Oh, I think you're muted.
How about now?
There you go. That's good.
How's it going?
Good, good. Yeah, so I was back to back with trainings, and somebody told me like do less training and do more action and work, and then buy back my time, right? Like,
Oh, right. Oh my gosh. What trainings were you in?
I'm in like a lot, which is not good, right? Like spreading out. I'm in like Atomy network marketing, and then there was one that was from Australia. They're showing how to speak on stage. So she's running
Oh
the
my.
5 day challenge. Yeah, and I know there's a lot of the other ones out there, like oh, how to do courses. And actually, right now there's a Russell Branson's doing his other as a talk about a workshop about it's not ClickFunnels this time though, so it was something new and interesting. That's why I'm like, okay, maybe I should tune in. But I'm like, oh no, I'm gonna interview AJ instead. Yeah, so
Well,
yeah.
I'm flattered. Thank you.
Yeah, because spend time on social media, Instagram, Facebook, just learning so much, right? Yeah, yeah.
Right.
So thank you so much
Right.
for like connecting with me and allowing me to ask you lots of questions. I saw your bio on the school, and I'm like, wow, like you're like a hardcore go getter. Like just go 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 go, and you just move so fast. And I was like, wow. And everybody keeps saying, right? Marcin keeps saying like you're so young and this and that. I was like, he's smart. He got there, like one of those people, made $1 million at age 20 and became manager at 30, whatever it was, like early on. So that's impressive. Yeah,
Yeah, he
yeah.
did it really. Marson did it really, really young. I'm still, still working. I'm still working on it. So
That's
we'll get
good.
there.
Building, yeah,
Would
building
you,
your empire.
would you prefer me to have this be like landscape or vertical?
Uh, it doesn't matter. I guess landscape is usually the traditional way, right? I know what you might call it. The new generation likes it vertical.
Right. Yeah, yeah, yeah.
Yeah,
Whichever way. I'm good with it,
yeah,
whichever way.
yeah. That works. Yeah, yeah. It's good. It's good.
Cool. All right.
Okay.
Sounds good.
Yeah. So we'll just start. If you allow me, I will post this on YouTube channel just to create more content in my YouTube, and hopefully that gives you more visibility and credibility and all that stuff.
Sure.
So
Yeah.
yeah,
However I can help, and I
awesome,
appreciate it. I
awesome.
appreciate
Yeah.
the opportunity to be interviewed. So
Okay,
thank
so
you.
I'll just say so the thing. So hi, I'm Aimee Lai, and I'm from Zenland Investments, doing a video podcast on very exceptional, well, successful investors here, and we have AJ Smith. I think that's your last name, right? AJ Smith.
Yep.
Here
Yep.
on the call. Yeah, thank you so much for coming on this video podcast. And can you just tell me briefly about yourself, your background, what you were doing in the past before you segue to your other new career?
Yeah. Thanks for having me. And I just want to start off by saying, thank you for the opportunity to be on here. I started off in real estate. I started my education in 2018, and I, like a lot of people, got stuck in that analysis paralysis stage where you're reading books and you're listening to podcasts and you might even be calling people, but you're not taking action. And so I eventually, after 3 years of being in that stage of reading the books and analyzing 700 properties, I finally pulled the trigger. I sent 5 offers in 2021. Four of them got rejected, and the fifth one was accepted. And so that was my first property. That was my first fourplex. And from there, I live in Iowa, so the property prices are pretty different than some other places in the United States or across the world. Um, but in the United States, especially, Iowa's a pretty inexpensive market. And so I was able to pretty quickly, house hack and live in a property and then rent it out to other people and continue to buy more properties that way until I reached about 19 units. And from there, I realized, you have to bring on partners if you want to continue to scale. There's a limit to how big you can grow if you want to do it by yourself. And so that led me down the road of commercial real estate, down the road of partnerships. And that brings us to today, where I've got 109 units alongside a bunch of partners in a few different states. And everything from developing land to, fourplexes and eightplex, a 75 lot mobile home park. And we also have an office complex in there as well.
That's pretty impressive. Yeah. And I guess backtracking a bit, what kind of sparked your interest in real estate instead of doing some other business or just continuing in a job? What was the kind of like the trigger to kind of maneuver?
Yeah, so I studied accounting in college, and as I was studying it, I found out about the United States tax code and how it is very positively, favoring investment in real estate. There's a few different ways that it does it, a lot of different ways actually, through various tax breaks and whatnot that I learned in college. But I just learned there's so many ways that you can reduce your tax load by investing in real estate. And I also asked my professors, I was like, hey, who were your most wealthiest clients and what did they do? And the common denominator between a lot of them was they invested in real estate as part of their investment philosophy. And so I figured, I should just follow what's worked. And so that's what I did. I just started to learn the language. I started to learn about depreciation, about appreciation, cash flow. How do you force value into property? And what I really liked about real estate, and this is how I explain it to my friends who love the stock market, they love crypto. I'm not saying that those aren't great investments, depending on the person and your risk tolerance. But the reason why I like real estate is because the stock market, for example, people always talk about buying the dip. Like that's the apex, right? The best of the best is you buy the dip. You buy it when it's low and then it goes up in value. Well, in real estate, you can do that all the time. You can figure out what the dip is based on where the property, you can negotiate the property down to sell to, and then you can drive it up to that peak through your own efforts or through the efforts of the people that you hire to make the property nicer. And so that's what I like about real estate is you have an element of control that you don't have in the stock market.
That's a good point.
Thanks.
Yeah. So I guess you follow a lot of newsletters and other investors' writings and news media to kind of follow the trend and figure out like which are good areas, markets to buy, and when is a good time to buy, sell. Like who are some key ones that you follow that you highly recommend?
Yeah, there's a few different newsletters I can recommend, and one thing that I really love about today is there's so many places that you can get information. But I'll just name a few newsletters. There's the Best Ever Commercial Real Estate newsletter, which has a lot of various topics that they talk about each week. There's the Real Deal. That's another good one. There's, of course, Bigger Pockets, which is one of the biggest real estate investment sites, especially residential sites. Commercial Best Ever CRE is often ranked among them. But I'd say each of those platforms have a lot of different information that investors can consume based on what they're trying to learn.
Yeah, there's no end to the amount of learning we could get. So
It's
my
true.
other question is, obviously, somebody kind of like helped you out and guided you along the way when you started your journey of real estate. Was it coaches or mentors, or you just you bought a lot of expensive programs by to follow trainers?
Yeah, it's a mix. I bought a lot of lunches. I bought a lot of lunches. That's my favorite. I love lunch and learns. I love to cold call owners that are in my local market and just take them out to lunch and just, pick their brain that way. Surprisingly enough, when people first said that, I'm like, there's no way and no reason that someone who owns like 1,000 units in a market is going to sit down with someone who's just starting. There's like no incentive for them to do that. But you'd be surprised. I had probably 6 or 7 conversations last year that were just me sitting down with a complete random stranger, no referrals. And, we just talked about real estate and I learned a ton. So I think there's a ton of value in just, you know, offering something like lunch, but oftentimes people just love to teach. They love to talk about real estate, especially if they're in it with someone who wants to learn it and grow in the space. So that's how I grew. Was I did a lot of lunch and learns. I called a lot of folks that I found on forums, the Bigger Pockets forums, other forums, and I just started conversations. And that allowed me to ask questions and learn lessons that were, a couple years ahead of where I was, and avoid some pitfalls. You still have to learn, you still have to make your own mistakes, and you're going to, no matter the number of questions that you ask. but you can sidestep a lot of that stuff by just asking the right questions of the right people.
That's very insightful, actually. You know, the you were asking me earlier what I was doing. I was actually in a training with a lady who, her I think her brand is 100 lunches with strangers. So it's interesting that you mentioned it. I'm
I love
like, it
that.
works. This technique works. Yeah. And my other
Yeah.
question is, are there some like real investment gurus that you look up to that you follow?
What's up?
Oh,
Sorry.
sorry. This is a bit distracting.
No, that's okay.
Okay. My Little Pony. This is their world. They'll go, hi, Mr. AJ.
Hello,
Hello, how are you?
I good.
I am good.
Good. What's your name?
My name is Ariela.
Nice to meet you, Ariella.
You go, thank you.
Bye bye.
Bye. She's born in Toronto, and I left them here during the whole pandemic. So they've been in Taiwan for
Oh,
five
wow.
years. Yeah, that's why I go back and forth between Canada and Taiwan. Yeah, yeah. But
Yeah, that's cool. That's
it's
cool.
from a different generation. You know, My Little Pony.
Yeah.
Do you remember
No,
this?
honestly,
Well, you're
yeah.
younger than me, but they used to be
Yeah.
cute, and but now like the cartoons, they have a lot of attitude. They're like very
Really?
sarcastic. Oh, little My Little Ponies, yeah. And I'm like, what are they teaching these little young generations?
I was
Anyways,
just gonna say, that's where they learn it. My
yeah.
nephews have fun
Some
with it,
phrases I'm
right?
like, adults say that. Where did you get that from? Like, yeah. So
What was the
sorry.
question?
My question was, are there like real estate gurus that you follow, like Robert Kiyosaki, or that you look up to, right? Grant Cardone. I know he's sometimes like people's favorite, sometimes not, or other people that you kind of admire, look up to in real estate.
Yeah, I'd say Kiyosaki's one of them. Ken McElroy, I met him in person. I had the pleasure of meeting him in person in Arizona at a conference in Scottsdale. I enjoy both of their content. I think though, oftentimes I think folks look at some of those folks that have billions of dollars in assets under management, and they kind of aspire to be like them. And I think that may be a great goal. But I think the thing that's helped me a lot is I just try to focus on who's one or two steps ahead of me, and then how can I get in a circle around that person and learn as much as I can from them, because it makes it feel a lot more attainable than like, oh man, they've got $1 billion in assets under management. How am I going to ever get there? First you start at 1 million. You focus on, how do I get my first 1 million in assets under management? Then it's 10, then it's 100. So for me, I focus a little bit more on like, how can I meet people at conferences, or how can I meet people online that are a couple steps ahead of me that I can maybe take a couple things from, improve my process, and then move forward.
That's an excellent idea. It's just a matter of, I guess, figuring out who's just a few steps ahead, right? Because some people are like, yeah, millions of light years steps ahead. Yeah.
Right, right.
I just want to backtrack 5 more steps or 10 more steps. Like, let's say if there's somebody brand new, what would you advise to them when they're just starting out? Because perhaps their background is not in finance, perhaps they never bought their first property. And then how would you get them to kind of start? Especially if people are very concerned with capital, right? I guess in Canada everything is a little more expensive than Iowa, or no, and
Yeah.
and some people feel like, oh, without a 9 to 5 job they can't really like not never mind scaling, but just even buying their first property because the mortgage rate is still kind of high, even though they say they reduced it. Yeah, how could they get started?
Yeah, I'd look at a few things. I'd look at partnerships. I would master underwriting. And then I'd focus on networking. And I'll go through each of those. The first thing I'll start with is underwriting, because I think in order to bring value to some of these partnerships where you're raising capital in that way and you have people who are willing to trust you, you have to understand the numbers. And so underwriting is just a fancy term for what can I expect the value of this asset or this product be? And so in order to understand underwriting, there's a lot of inputs you have to learn. There's a lot of vocabulary and terminology that's very important to learn. So I think the common advice is to pop open a book or listen to podcasts. And I'd still ascribe to that. I'd still say that that's a good route, as long as you are taking the lens of, I'm here to learn rather than just to entertain myself. I'm here to learn the terminology, and I'm here to learn, very specifically the things that I need to know in order to analyze. Then I think that that's a good use of that time. So I would start with learning the terminology, and then I'd go into underwriting, and I would just analyze as many deals as I can, try to find as many of them as I can, and then see at what price points they make sense. And you'll start to notice the deals that are listed online, they don't make sense for the prices that they're listed for, and that's why they're staying on the market. And so you'll start to see, I might need this for 40% less or 32% less than it's listed. You'll start to know, okay, now I'm getting a little closer on this underwriting thing. And then I'd start to reach out to more mentors. I'd reach out to people, maybe they have one commercial property, maybe they have, 5 or 10. But they'll be able to teach you some of the areas that you're missing. Maybe it's reaching out to a mentor. Maybe it's just finding those folks that are a couple steps ahead. But they'll be able to teach you some of the things that you're missing in that underwriting area, so you can become more confident. And at that point, you can then start reaching out to various, private money lenders. Maybe it's an equity investors. But I would say, start small. That's kind of what I did. I learned about, what are some of the inner workings of a property? How do you manage a property? How do you understand what is the right area? What's the wrong area? How do you look at, more macro lenses? I learned all that from smaller deals. And because of that, now I have the knowledge necessary to look at some of these larger deals and start to take them down and start to see how some of these pieces work together. So I'd start with underwriting and terminology, then I'd look at partnerships. And, from there, you can grow way farther than your 9-to-5 income will allow you to, because now you're leaning on other people's money and you have the experience and the expertise from smaller deals to adequately, take care of that capital. Because at the end of the day, that's the most important thing. They're trusting you with that money, and you need to have the experience and the knowledge necessary to perform on that front.
Absolutely, like you're taking care of the work. Yeah. In those roles that we've talked to in M1, would you say your role was capital raising, asset management, or acquisition, or all of them, because you were working with GPs, general partners?
It's been all of them at one point or another. So mostly in my very early years, my first couple of years that I was starting, it was acquisitions, management, and capital raising. Most of the capital came from me. All of the management was me. All of the acquisitions was me. And as time has gone on, now I have more relationships. I have more of a track record, more proof that we're able to do these things. And that's allowed me to leverage some of those relationships, bring more capital, and get into various deals, and bring some of my operational expertise from running my smaller deals too.
And which role would you say is your kind of like your favorite? Not necessarily easiest, but your favorite.
Yeah, I'd say the most difficult is absolutely operations. Operations is pretty hard. In terms of my favorite, I'd say it's capital raising. I love the connections. I love the conversations. I love teaching people about real estate. And so when all those come together and I'm able to introduce, investment opportunities to folks that may not have seen something like this before, maybe they're very invested in the stock market, in the S&P 500, or they've used a lot of, CDs, certificate of deposits, and then you show them another opportunity that's backed by real estate, then kind of a light bulb goes off and they start to see like, oh, wow, there's all sorts of alternative investments. Maybe it is apartments, but maybe it's, mobile home parks. Maybe it's something else. But you start to see the light switch go off for these people, and they start to understand, I have other places I can put my money than just the stock market or the bank.
Exactly. And while you were capital raising, you raised money probably from friends, family. Are there other circle of people that you reached out to, and how did you reach out to them?
Yeah, masterminds have been incredibly impactful for me in my capital raising journey. So I've been able to reach out to folks who are in various masterminds that I'm in. I've been in about 4 masterminds so far over the course of my career. And so my network from those, from my conferences I've gone to, I've been able to reach out to the other investors that I've met through those communities and pull upon those relationships to grow that capital raising capability. One piece of advice that I would share with people, especially folks who are maybe full-time in real estate or are looking to become full-time in real estate, I think there's a common misconception that if you go to real estate conferences, it will help you to raise capital. I think it's actually the opposite. There's a lot of people who do their own deals that go to real estate conferences. And so many of those folks will be more interested in investing in their own deals than trying to invest in yours. And so what I focus on now is, tech conferences, finance conferences, maybe it's some other kind of, niche, but those folks are not in the depths, in the trenches of real estate every day. And so you're able to offer a different perspective and an alternative to what they've seen rather than just another investment that's in real estate.
Medical fields, it's always great as well. Yeah.
Medical
Makes
field,
sense.
absolutely.
Yeah, because now it's very trendy to go on LinkedIn and raise capital from there. Have you found that social media helped you, or you prefer like the warm contacts where you seek them out locally, or?
Yeah, I'd say social media absolutely has helped me. And I would also say the warm contacts from social media have been very influential. So I think there's a way to combine the two. I think there's cold outreach where you can reach out directly to someone. But in my perspective and how we're trying to approach it is I don't, try to pitch them anything when I hop on a call with them. I just want to help them in whatever way I can. So maybe it's talking about financials, maybe it's talking about real estate, maybe it's talking about, buying businesses, whatever it is, whatever knowledge I can help with, systems, process creation. I try to assist them in any way that I can. And if they have a referral to someone that may be interested in learning about real estate or investing in real estate, then, I see if there's kind of a referral ability. But if they are able to refer, then that becomes a warm lead from that person to someone else. And there's a lot more trust and credibility that's created there, especially after you've added value first.
Excellent. Yeah, absolutely. I have a personal question to ask you because I can tell you're very articulate, charismatic, and very likable, and you're talking to all these like high net worth people, and for somebody who's like hasn't reached that level of your success yet, maybe they're very intimidated to speak to those people while capital raising or just building connections, right? How can one overcome that kind of like intimidation or like shyness or discomfort to talk to people who are doing, who are multimillionaires, billionaires, and meanwhile they feel like they're like a small fish in the pond.
Yeah, it's a great question. I think especially when you're starting out, like it's so wild to think about, you might be speaking to someone that has $100 million in investable assets or $1 billion in investable assets. But what I've found after speaking to some of these folks is they're not extremely different from you and I. They're still people, right? And so I think the more you can relate to them on an interpersonal level and the more you come at it from, I'm trying to bring you something of value rather than, I'm asking you for something. I think that changes the dynamic pretty effectively. And you come at it from more of a consultative standpoint. I'm more of a consultant than the alternative. So that's what I've learned. It's tough. It's honestly very tough when you're starting these conversations because there may be that disconnect. You may never have met someone that has a net worth of $1 million or has made more than $40,000 a year, and now you're speaking with someone that is on the complete opposite end of the spectrum, right? So I think it's a mix of repetition, but also a mix of empathy, realizing like everyone has common connections.
上，
阿妹啦，
好啦，好，你看讲的话，你还能讲的背吼，我讲嗨。
Hi.
I should have locked the door or like ask my mom to take them out. Like the key to the key bag, yeah, what do you have going on?
Bye.
Working from home, right? Sorry. Yeah.
It's okay.
yeah, sorry, let's lost a train of thought. You were sharing about how to connect with people and kind of like talk to them as real humans. Yeah.
Yeah,
Hmm.
exactly.
Okay.
That's all it is. I think it's just speaking to them as real humans, connecting with them, that way. You also have to know your stuff a little bit. You
Mm.
have to be very confident in what you're presenting. You have to understand the ins and outs of it. You have to understand what the risks are and be able to explain that to them because people, you may have a great investment opportunity and you're speaking about how great the returns are, but people really care about, will I get my money back?
Mm.
And so when you start with that, I often lead with, um, it's something where I'm talking about the risks and I lay out, here is some of the, most important risks that we've identified, and here's how we're mitigating for them. Um, I found that that builds a lot of trust, and also that builds a lot of transparency, because then that opens the conversation for them to ask more questions about maybe, things that we didn't talk about or other concerns that they might have.
Hmm. At the beginning, would you bring like your business partner with you to go talk to an investor, just so that they know like to cover your back whenever you don't know how to answer like the risk questions or the underwriting questions?
Yes,
It-
absolutely. Yeah. Yeah. I remember the first probably, 5 or 10 conversations that we had. It was us, tag teaming the conversation. Maybe I missed something in the presentation and he would just fill in, maybe, vice versa. He would give me feedback on, maybe I'm going too quickly or I'm speaking at too, much of an investor level rather than like kind of common language. I might be slipping too many, IRR and ARR and all those acronyms in. And so bringing it down a little bit and just speaking in kind of plain language. But I think having that, especially initially, is um, very helpful because it allows you to see from an outside perspective, okay, what are some of the things that I'm missing? And how can I allow myself to connect with more people?
it's like a security bridge.
Yeah,
Which good.
exactly.
Yes, excellent. So now that you've done so many projects and you've done a variety of portfolios as well, what are you looking for in the near future? Like, what other projects are you doing? I think you're heading to, oh, you've started doing land development already, right?
Yeah, so we're developing 50 mobile home park lots in Texas, just north of Austin. That's going to be our first development project. We're very excited for that one. We've got another 49 units under contract that are apartments that are in Iowa. We've got a lot of single family homes that we're flipping as well. So a lot of different projects. There's a lot of variety, both in geographic location and in asset class. And so we're just looking forward to continuing to move forward this year and taking down some more projects.
So we should say Iowa is stamp as AJ Smith's. That's your whole state.
Yes.
Yeah.
The whole thing.
Yeah. If there is one thing you like other people to remember you by, as a very exceptional success, what would it be? What would be your slogan or your character that you want other people to remember you by?
So whenever I meet new people, I just want to focus on being helpful. If I can be helpful to that person, I think that's a positive, interaction. Whether it's sharing knowledge, maybe it's sharing a connection. I try to focus on how do I help this person achieve whatever kind of goal that they're trying to achieve. That's the lens that I approach various conversations and how I hope that that conversation will be remembered.
Nice, nice. And if you would like to share, what's your like big dream and legacy that you like to like kind of leave behind?
Yeah, I mean, I'll just share kind of a midterm goal. So I notice you have a couple kids. That's something I want for myself someday. I think it's a beautiful thing. I've
Be
got the nephews.
prepared.
I
It's
love
not
them.
about your time,
You
it's
know,
about their time now.
yeah,
But
yeah,
you know what? I have
absolutely.
to say, I was looking back. Actually, I was writing it on my phone a couple of days ago. If I could relive my whole life, how would I have done it? I wish I had built all the businesses while I was like single, young, and had lots of free time. Like I didn't know what I was doing while I was single. And then while this was running, automated. then you start building your family, right? Because you know it's easier, then you can focus and be in the moment with them instead of be like, hey, go away, you know, I'm doing an interview here, you know. So that way they don't feel like rejected, right? But you know, you make up time, just buy them something after, whatever, or spend time with them, you know. Yeah, so that's good that you kind of have lined it up this way. Like you have a lot of, you know, projects already under control. What was it called? Stabilized, and then they're automated, right? So that's good. And then you can
Yeah,
focus on the
yeah.
family later. Yeah.
I everyone has their own path. I think, my path so far, I've just been focused on building the business. And once that's stabilized, like you mentioned, I'll be able to focus and kind of shift a little bit and go more toward the family part. So, in terms of legacy, I don't think too much on the business part about that. I think more so, how will my family remember me at some point in the future? And so the business is being built to facilitate that for myself.
Yes. Another way people will be like, oh, just pass down the wealth generation, right? That's how they would like it.
Yeah.
Yeah,
Yeah,
yeah, it's all good.
absolutely.
Yeah, it's always like how you have treated people. That's how they will remember you based on that experience, right? They were
Right.
yeah, in the training earlier they were talking about the experience and the emotions that they feel during the whole session is key. Yeah. Or
Absolutely.
if you want to be a coach in the near future, how many lives will you transform? Because in the
So
past
that
it was
is
interesting. In the past I always focused on just educating them, give them information, right? Because my background was in library, and it was about, yeah, just teach them this, educate them on that, give them more resources and information, blah blah. And now in business they shifted. It's like, oh, how do they feel when you interact with them? How did you leave them behind in a better place than when you first met them? Like, okay, this is a little different. After all, it's a people kind of world here. Yeah,
right. This is
yeah.
different. How do I shift? How do I shift here? Yeah. I come from kind of an accounting background, and so I come at it from more of that analytical, kind of logical side as well, and that's where a lot of my focus has gone, is just education. Um, but my business partner kind of balances that out. Like he's someone who's a little bit more focused on, like, okay, how's this person feeling during the presentation? Are we missing anything? So I think having that balance is very helpful.
Yes. And I think you have a stronghold because you have accounting as your background, right? So underwriting is like a breeze for you. You don't need to think. You can do it in your dreams and when you're sleeping. Yeah, for some of us, like, me, I come from words, not numbers, a background. And then, it's a little more challenging. That's why my coach was saying like, oh, every time I'm underwriting homework, I kind of like shrink. And he's like, get that arm muscle built and keep underwriting like 3 a day. I'm like, okay. And then other people are like putting more offers. I'm like, okay. But yeah, it's just, overcoming that hurdle of the challenge and just do it, right? Instead of like think about it.
Yeah.
Yes, yeah.
And sometimes it's leaning into your strength too. It might not be numbers for some people. Maybe for some people it is numbers. Maybe for some people it's words and presentation or written presentation. There's there's a spot for everyone on, especially a commercial real estate team. I mean, you need people who are, very deep thinkers, and you need people who are very, they love to talk and they love to present. You can use both of those folks, and both of those folks have a home on the team. It's just kind of finding where do you fit the best.
Exactly. I agree. Yeah. Oh, I remember one more question I didn't ask earlier on. When you were looking for general partners, and like, first of all, how do you find them? How do you like build a trust? Because some people, they seem great at the beginning, but when they're stressed, they act a whole different way, or they don't they're not calm in a stressful situation, right? And real estate, as we know, it could crumble or it could, go well. And I know I've heard of the scary stories where they take the money and run away. That's one, like the scam. And the other one's like they actually don't mean to be mean or bad people. It's just things went wayward, right? Like for example, the market wasn't good, or the mortgage interest went up, and that was not in their control. And so now all of a sudden they don't have the funds to pay back to the investors, and kind of like they're screwed in a way. So anyways, how would you find general partners, and kind of how can you trust them? Do you ask them a lot of questions, or you go camping with them to see how they react to stressful situations, or like
Yeah, I think so. There's a few layers to what you asked. I think the first layer, you mentioned interest rates changing and how that's crushing a lot of crews. I think a lot of that's experience, right? Those crews that are getting crushed very commonly are new to the space. They've been in the space for less than 10 years. They came in after the great financial crisis, and from there, they just kind of experienced one of the best bull markets that we've ever had for commercial real estate. And so with that, you know, partnering with someone who has been around the block, they understand, what are some of the things that are going on and what are some of the trends that we might be able to buck a little bit. I think having that level of experience, especially at an operational level, is extremely important because those are the folks that will be on the ground that will see, what are some of these, the impacts of some of these changes that are coming down the road. How will that impact our business? And so what I look for, especially when I'm looking at it from, I'm helping to raise capital for a deal, I'm looking at the underwriting, I'm walking and doing due diligence, especially if I have someone who's going to be taking the majority of the operations, I want to make sure that that person understands every part of the business. They're not someone that's just getting in or they're just trying to figure everything out and they don't have their systems in place and, XYZ about their underwriting is off. I want to make sure that that person is basically, like we were talking about earlier, taking good care of investor capital. They have good references that will show that they've done that in the past. I think track record is huge. And to be honest, there were groups that had pretty good track records that are still experiencing a lot of damage from changing interest rates. So a lot of that's experience. A lot of that's just, time in the market. How many cycles have you been through? For myself, I like to speak to my investors and then figure out, what are some of the references that I can reach out to? Who are some of the folks that they've invested with in the past or have invested with them? You can also, kind of get a feel of a person based on the conversations that you've had with them, the in-person meetings that you've had. And then if those meetings and those conversations go into, okay, now tell me about a deal that went bad or went poorly, what happened? You can start to get into more of how did you react? Did you take responsibility for it? Was the responsibility shifted onto other people? You can start to see some of those trends a little bit. So that's how I approach it. I approach it very much from a track record standpoint, from a references standpoint, and then also from what was the reaction on a deal that's gone poorly? How did you react? Is it something where you put someone else's interests above your own? Or was it something where you put your own interests above the other person's?
Yeah, that's a good point. Because sometimes I find some people when I talk to, they don't want to divulge a lot of information. And I feel like when they're quiet, they seem to be hiding stuff. And it's like, okay, well, obviously not a lot of people are good actors. So in conversation, you find out like where the holes are in a way, how they will handle something or not. Yeah, very good, very
Right.
good.
Right. And especially if you've been investing for any longer period of time, you're going to have deals that didn't go the way that you think they were going to have gone. And so I think being willing to share those, I'm pretty vocal about, some of the deals that have not gone the way that I thought they would on social media. I try to share those on social media and just share like, here's what I learned. Here's, what it cost me. And here's how I'm moving forward from it. I think if someone is more transparent if they're more on the transparent end than on the, opaque end, on the end that's not wanting to divulge, I think that that's a good sign.
Yeah, yeah, it's true. After all, not everything is in our control, but this is how we kind of like mitigate the risk is important and the lessons that we learn. So totally true. Yeah, there was a restaurant near where I live here, and it was like one of those nicest organic restaurants, which we don't have in the village here. But unfortunately, I heard the partners didn't agree, so they like bulldoze everything. Now it's just they're just planting vegetables, which is so sad because that's the only nicest restaurant we have in the village. So a good partnership is so key, like for the long run, right? It's not good when one partner wants to sell, one partner wants more of their profits back, and then it's total chaos, and the owner couldn't handle it, and just yeah, it got bulldozed, which is so sad. Yeah, but anyways.
Yeah.
Yeah, so I mean, I guess in future you're projecting, looking forward to still building in Iowa. Are you ever gonna invest in like, I don't know, Taiwan or Canada or Costa Rica somewhere? It's all
Never
open.
say
Yeah,
never.
sorry.
I'll never say never.
Get out of your Iowa comfort zone, out of there. So give other people a
Well,
chance.
we are doing some Texas. We are doing some Texas, I will say.
Yeah.
We're a little bit out of Iowa,
I was just
but
teasing you. Yeah, yeah, very good.
yeah.
Well, I really appreciate your time. I don't know if you want to add anything else or it's good or
Yeah, if anyone wants to connect with me, you can go to connectaj.com. There's a free guidebook there if you want to learn how to invest in commercial real estate, some of the beginning steps that'll walk you through. I believe there's 8 steps, your first 8 steps to investing in multifamily. So there's a free guide there. You can download that, and then you can learn a little bit more about me. My socials are also linked on that page.
awesome. Thank you so much. Thank you for your time. Yeah.
Yeah,
Okay, thanks.
absolutely. Thank you.
Thank you. Yeah, later I will I guess get your social media, all that stuff in one for the end card of this video. That'd be good. I was gonna suggest actually because you seem so affluent that you should write a book, but you already did. You wrote a guide already, so there you go. Yeah. Yeah, maybe later
It's
you can
short.
write a
It's
lot of
really short.
books. Another book.
Yeah, we're working on a couple right now.
Oh, okay.
But yeah, what's going to happen is on that website, we're going to have a resource page, and then we're going to have some of those books, when they're written. We're going to have some of those books linked on there. So
You're writing them or AI is
yeah.
top secret, yeah. Yeah. Well, what I found is just from, what I know of you, you actually give a lot of secrets out because a lot of people they don't want to divulge any information about how they do the trades and this and that. And I'm like, well, then you're really not helping anybody, and they're doing well, but they don't want to like share any information with other people who want to learn and do well. So I find it really sad. Like there's some people who really clamp up and they don't like share anything, and I'm like, okay, I guess we're not gonna be best buddies. Yeah, because if somebody wants to learn, they have to pay a lot of money to coaches. And not
Yeah.
so many people want to be like free mentors. Let's just put it like that.
Nope.
So it's so great that you actually like you're so open to like kind of share and help other people. I guess you had that in the beginning from the top. They helped you out, so you're willing to help other people down. And those other people who are not helping, I guess they never got help in the beginning. That's why they don't want to share any trade secrets either. So it's
Yeah.
like, too bad.
Yeah, it might be where they just learned everything themselves and they're like, I don't want to tell anyone because this is mine. I remember listening to a video from Alex Hormozy,
Oh,
and
yeah.
he talks about how, if you give away free knowledge, people will start to wonder, like, oh, wow, like this is so valuable, the free stuff. How much more valuable is the other stuff that I can learn if I, either do the paid thing or whatever it is, right? So like Hormozy focuses a lot on how can I give away as much free value as possible. So, I figure I'm at a point in my career, it's very early still. I'm sure that I don't have like golden nuggets that have never been taught before or shared. And so, I'm absolutely willing to share as much as I can because that helps. I think when you teach other people, it helps you learn too. So yeah, is there anything I can help you with? I'd love to help, if
Oh, me.
you have anything you want to connect with.
I just need
you
more
know.
sprinkles of like focus and like fast energy or whatever it is, because I like unfortunately I have maybe borderline ADHD. I'm so interested in so many things. So right now, like I was talking to Mars and he wants me to like go out there, write more offers, right? And I feel like I need to do capital raising, right? I've kind of exhausted all my capital just putting in properties that a realtor suggested and wasn't a good investment. I'm dealing with a pre-construction condo. I need to get a mortgage to close it. It's here in downtown, not here, but in Canada, downtown Toronto. So that's just one thing I'm working on this last 2 weeks, like getting mortgage without a T4, which is like job income pay stub. So I'm like, okay, I guess private loaners are gonna charge me like 8.9% interest rate, Yeah, but besides that, I wanna kind of move on and acquire multifamilies, but I need to raise capital. And I tried that for with 6 people I knew, 6, 7 people. I didn't go on calls with them. And then they thought I was scamming them, like it was a fraudulent thing and this and that. I'm like, what? No, like, because they're not
No.
used to me capital raising or asking other people for
Right.
money. They're used to just maybe me share information or sell them an MLM thing or something. But all of a sudden I'm like asking for like, more capital, 10,000, 25,000. They're like, I mean, somebody hacked into your Facebook and he's trying to like money launder or whatever. I'm like, no, 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 no. That was just me capital raising. So I'm like, okay, you know what? I gotta stick to Mars's script. That probably works better.
Yeah.
Yeah,
Yeah.
yeah. So
Oh
that's where I'm
man.
at. Of course, yeah, I wanna get a multifamily sometime this year. Rather than just think about it. Like I was stuck in analysis paralysis last year because, as you know, M1 was very advanced for me. For somebody who never took real estate education at all, it hit me cold on the head. I'm like, oh my gosh. And the more I knew, the more scared I was to take any more action. But this year, I'm
Right.
like, I'm done with that. I gotta take action. I can't just think about it, right? Like, I saw Victoria. I don't know if you know Victoria Clooney. I saw her in her early stages, and then she just grew and grew and grew. And now she's doing like, that thing that Russell Brunson's doing, like the click funnels, the landing page, the opt-in page, and then get people to buy the
Yep.
programs and the coaching. So she's doing all of that, and I was like, wow. Within a year, I saw her like do so well, right? So it's also amazing. I guess I need to find somebody I can copycat from. That's how,
Yeah.
like you
Yeah.
mentioned earlier, model after somebody, right? Like,
Yeah.
and I'm just like, well, everybody's nice. I don't know who I want to be like a copycat to, because I don't know. I just want to be me, but being me is not getting me really far either, right? Like, yeah. And another note I was gonna tell you was, even though you think you don't have gold nuggets, you do. Like you provide a lot of insights that some other people don't, and also the way you present will be delivered differently than somebody else. So either way, you
Right.
still win. That's what I'm saying.
Yeah.
Yeah. So
True.
yeah. So don't feel like, oh, there are hundred thousands of real estate investors who already said this. But the way you say it actually has a punchline to it, right? Like
Yeah.
you deliver in a very succinct, simple way that's kind of like doable, instead of like other people delivering like overwhelmed, too much information, and then they're scared to like take any actions. Yeah, so it's all
Yeah.
good. Yeah,
Analysis paralysis. Like there's too much info and it overwhelms you, and you're like, I can't do this.
big time.
Yeah.
Yeah, and that's how I find some of the real estate programs are like. It's like, well,
Hmm.
where do I start? Like, give me like baby steps A to Z, right? And you
Right.
know how they revamped the whole M1. I'm like, what happened to the accelerator? Like it was there, and then
Yeah.
now they redid the whole website for the third time since I've been in the program. I'm like,
Right.
okay, I guess I gotta open
Where
it
do I
and find it.
go?
Yeah, yeah, and I
Yeah. I
think with
mean,
yeah,
I was just gonna say, I mean, honestly, I feel pretty similarly. Like there's M1's great in that there's so much content, but there's so much content. Like there's so much to learn, and there's so many different modules, and there's so many different things that you could focus on. Like I met someone probably a month ago, and they've been in M1 for 2 months. And the first time you sign up is 3 months. They've been in M1 for 2 months, and they're just now saying like, okay, I finished all the modules. Now I'm trying to figure out what to do, and I'm like, that, like that's 2/3 of your time you spent on education. That should have been like setting up a team and taking action and doing all this other stuff. Because I know for me, like I was honestly overwhelmed by all the content when I was first in there, and I was just focused on like I'm trying to do something, I'm trying to get something done. I'm flipping a house, I'm doing some other stuff, whatever. Um, you know, I want to just like get there, right? Um, and so I'm DMing people, and I'm actually like doing the things, but I'm not progressing through the content. And so like I wasn't getting some of the advanced, like funnel strategies and whatnot. I was doing some of the really basic stuff. So I think that there's a middle ground where like you can't be so simple that you're not it's too actionable and people get like stuck taking action, but you can't be too advanced where people are just diving into it and they're not picking any. Um, so that's something I'm still trying to. I think the middle ground is like now I've hired a VA team. I got 3 VAs. I've hired a VA team and I'm having them comb through some of the stuff and like implement it week by week and add it into the systems and processes we have. And if you're able to do that, kind of piecemeal, then it doesn't feel so overwhelming, especially if you're not the person doing all the stuff. You're just tasking someone with doing all of it. You know what I mean?
Yeah. I agree. I mean, when I first started, I was like brand new, didn't know what's going on, and all the other people who were, veterans formerly in the M1, they were already skilled. They're like raising $1 million in a month, and they have like lots of units and doors and so on. So I was so intimidated. I was so shy. I was hiding for 6 months and just learning in the background, right? Now in came in December, like in came in not this December but past December, new crew of like newbies, and they were asking beginners, people's questions, and I felt so much better because now I knew all that stuff, right? So yeah, I think he had to kind of like had content for everybody from beginners to those who are already like scaling. So that's why he Marcin was providing a lot of information, right? And it's too much for some new people. So yeah, it's hard when it's a program that it's catering to all sorts of levels of people, and everybody comes with a different experience, right? Some are in commercial, some in real just single homes, some are in other things, right? Like garden suites and so on. Yeah, so but at least there's something for everybody. That's why I found the mastermind was really useful. I don't think you came up for the mastermind in September, but anyways, that was good. Like a very condensed 2 days of
Yeah.
everything. Yeah, and good.
Yeah. That was in Ontario.
It
Is that
was
the
in
one?
Burlington, I think. Burlington in
Oh,
the
really?
garage.
Oh,
Yeah,
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 yeah, yeah, yeah.
yeah.
I actually lost my passport.
Oh
I was
no.
planning on going and I lost my passport. I was like,
Oh, but you couldn't get
yeah,
into with next. Oh no, you couldn't drive in. Of course not. You had to fly.
yeah.
So,
Yeah. Now I
yeah,
gotta get a
passports
new
in
one.
Canada,
Yeah.
the fastest is 3 days if you pay like almost $200. But I don't know
Oh,
about
yeah.
states. Wow, it's too bad.
Yeah. I'll figure
Oh
it
no,
out.
now we can renew or get your new passport for the future one. Future
Exactly,
mastermind, yeah.
exactly.
And it was virtual
Um,
as well. I think it could zone in. You just couldn't talk to people. Yeah.
yeah,
Yeah.
I saw the recording of it.
Oh,
It
okay,
looked
there you
really
go.
cool.
See, at least you didn't miss
So
out.
you're trying to buy a multifamily this year, is that right?
I want to. I just need to like put my head down and raise capital. Like really just do it and get over the ego thing.
Do you know how much capital it would take to take one down?
So that's a good question. I think I was looking at something like a 10 unit in Edmonton, and it was at least 3 to 5 million.
Holy smokes.
I know. The prices in Canada are ridiculous, right? So you're probably telling me like, why don't you just go to Cleveland and buy a single family for like $200,000? So we make this fun joke, but we're being sarcastic about it. Is like Toronto's one down payment, you could buy a house in states very easily.
In cash. Yeah.
Yeah, and also it's easier to get a bank loan from states. I heard because they appraise it, or whatever we call it, base it on the property. They don't base it on whether we have a 9 to 5 job and how much income we have in our own bank account. You know,
Wait. So a 10 unit, they base it on your personal income, not the property?
I don't know about the multifamilies because I haven't gone there yet, but the condo single families, yeah, they want
Oh,
to see
yeah.
how much income we have. Like me, do I have in my bank account? How much how many how much is in my pay stub before they want to give a bank loan?
Wow. Okay.
Yeah, so I know right now I'm leaning on my spouse because like I quit my job last year, or remember no, I quit my job a year ago now. And then so I don't even have that. And even though he makes $160,000 as an accountant, they're like, oh, that won't
Mhm.
suffice. They need like somebody with a higher income. I'm like, well, this income he's getting in Canada, like what do you expect? So him to have like another 3 4 jobs on the side to reach that 200,000. So they're being very picky right now at the banks to loan money, and I mean that's why it's so hard for new homeowners to even like buy anything. Yeah, because I know a girl. She used to be my tenant. She wants to buy property, but her income is not up there yet. And I'm like, well, yeah, either get a second job. I was advising her get a second job so her income is higher to just take over the mortgage. Otherwise, I don't know how she's gonna buy property because
Yeah.
Yeah.
You'd almost have to do seller financing like that. That's almost the only way to do it, it sounds like.
What do you mean seller financing?
Oh yeah, yeah, yeah. Ooh, this is great. Okay. Your owner financing, have you heard of that before? Making payments?
Oh, like I know lease to own. Is that what you're referring to?
Kinda,
Okay.
yeah. So, but you can do this for commercial real estate. You can do it for residential real estate, multifamily. Um, so basically, seller financing. I'm gonna make it. I'll try to make it pretty high level. Um, you own a house that's $100,000. You own it free and clear, and you want to sell it to me. And I come to you and I say, I'll give you payments for your equity in the house. I'll pay you, whatever. I'll pay you $1,000 a month, for your equity in the house that's worth $100,000. Well, for you, that's what is that, 12%? 12% interest if it was interest only, right? But there's different ways that you can structure seller financing. So if I paid you $1,000 a month on $100,000 in equity, that's $12,000 a year in cash flow, right? That would be 12% cash on cash return for you if it were interest only payments, or it would be less if some of those were going to principal and paying off the loan, right? The loan would be of $100,000 and making payments of $1,000 a month. Um, so when you're looking at a multifamily property, basically you can pay people on a monthly basis for their equity rather than cashing them out immediately. So the seller, in effect, becomes the bank for you. So you may come in with a down payment of 20 grand. Like I might come to you and say, hey, I only have 20 grand right now. I know it's worth 100. Here's 20. I'll make payments on the other 80 and I'll give you, 5% interest on a 30-year amortization, and I'll cash you out in 5 years once I've built enough equity in the house, it's appreciated and whatnot. You can do that for single family. You can do it for mobile home parks. You can even do something that's called a seller carryback. Have you heard of that before?
No.
Oh, this is really cool. Okay, so basically, you are taking the seller's equity and you're using that to finance your down payment. So you'd have to find a bank that's okay with this. But let's say you have a house that's worth $100,000. The seller has a $70,000 mortgage on the property, and they've got $30,000 in equity. Okay, so 30% equity, 70% debt. Basically, what they can do is they can finance that 30% in equity to you on a new purchase. So you can say, hey, I'm going to have a seller carryback of $30,000 on this property. Bank, use this $30,000 as my equity in this property. I'm going to be paying the seller for this, but here's essentially as the seller giving me their equity. And then you can use that to leverage up a little bit more and have it so that you don't have to bring 30K yourself. You're essentially borrowing the seller's 30K and you're paying them monthly for it. So that reduces your cash to close, increases your cash on cash return because you have less cash invested in the deal. And if you're buying a value add property, or maybe it's currently worth 100, you get a bank loan for 70, and then you get the seller carryback for 30, and then you add in, another $20,000 to improve it, and now it's worth 200. Well, you're all in at 120, and you can take a, refinance out for 75% of that, which might be, $150,000. And now you could pay off the original note and the seller carryback, and you never had to bring the down payment in the first place. All you had to bring was, the renovation funds, and now you're able to get into that property with, no, very little cash down. So that was a lot, to explain, but what does that make sense? I guess.
I get the gist of the general idea. Yeah. I guess that's allowed in Canada. I mean, just have to figure out who's willing to do that strategy, right?
Yep. Yeah, and oftentimes um distressed sellers often want cash, like they want to be cashed out of things. And non-distressed sellers sometimes are the ones that are willing to give you equity,
Hmm.
like to carry back your down payment. So it's really interesting. Like if you look up multifamily strategy um, on YouTube, There's an entire YouTube channel that's dedicated to this. But basically, there are folks in the United States that use this strategy to buy apartment complexes that they're buying it with, basically very little cash out of pocket, and they're using a private money lender to fund the renovations, and then they're refinancing out, paying off the private money lender, paying off the seller finance, and then they're getting a new bank loan because here in the U.S., they don't necessarily look at your income; they look at the property. So even if they don't have a 500K per year job, they can buy a $5 million property without, all the income to show for themselves personally. Like I said, I don't know if that's the same in Canada. I don't know if it's the same on a refinance, especially. Like in the States, for example, they prioritize much less your personal income on a refi than on a purchase for some reason, whatever it is. So if you're able to get in with either a hard money loan or with seller finance, take that property down, improve it, and then refi, you don't have to go through the purchase, hullabaloo, the whole thing. Instead, you can go through the refi, which is a little less stringent. Yeah.
That sounds fabulous. I gotta explore that idea. Yeah,
Check out seller finance.
yeah, maybe it's allowed in multifamily or commercial properties, but I'm not sure because I'm not there yet.
Yeah.
Yeah,
Have you
and
spoken
maybe
to
laws in US are easier than here. They're in Canada, there are way more like bottlenecks.
Have
Yeah,
you spoken to Ken Chung?
I have. Yeah.
I know he was super into seller finance.
Okay.
So that,
Okay.
and he's in Canada. So
Yeah,
he
yeah,
would be
he's in
someone.
like the Vancouver West Coast side. Yeah.
Yeah,
Okay,
yeah.
I'll ask
I
him.
don't know if the laws differ between the territories or provinces.
Well,
Is territories
like
province?
British Columbia, I heard, renting is on off too, but Ontario, they're very strict, right? Like all the tenants get the power in Ontario to rent. They could even just stay there for free and the landlords can't kick them out. Yeah, that's why people don't want to like acquire properties in Ontario because it's a headache as a landlord or landlady. BC, it's borderline kind of like that too, but Alberta is very free. Alberta sounds more like states, right? Like kind of like free for all.
Okay.
Yeah, I can evict them within 3 days or whatever it is, and if they don't pay, right? And you
Yeah.
can charge rent however you want. In Ontario, you can only raise rent like 2.5% per year. You cannot raise more
Ooh.
than that. Yeah, and if they do fishy things under the table, well, if they're not caught, they get away with it. But
Yeah.
Denise McPherson, right? She's like, if people don't follow the law, it's screwing all the other landlords around in the province, right? I'm like, okay, yeah, all right.
Yeah.
Yeah.
Right.
Yeah, so maybe I should look into investing in states instead of getting a multifamily in Edmonton then.
Hey, if you want to
That'll
invest
be
in
easier.
Iowa, I know a guy. That's all
Yeah.
I know.
Well, I know two guys now, right? You and the other guy. Yeah. Excellent. Yeah, I think thanks for those ideas. It's like again, it's very insightful because nobody has shared that. Yeah. Maybe it's not allowed so much in Ontario, that's why. Yeah. But I'll
Maybe,
ask
maybe
Ken
not.
about this too, yeah.
Yeah, yeah. Ken, probably Marson, if he's willing to answer questions.
It's so funny.
Um,
Every time I talk to Brian Merriman, he's always like, "What's the strategy? What's the strategy? What's the strategy?" I'm like, "Well, what are strategies out there? Can you give me a list, right?" So then he won't tell me anything. I have to go to ChatGPT and find out myself, right? And I wish they kind of like touch on that, but Marcin wants to focus more on capital raising, right? Because I know
right.
other trainers they always talk about different strategies and so that's why like when I go to different trainers I learn different things because some will take you from bottom up and Marcin's like already like high level. It's like, okay, well,
Oh, yeah.
come down here to help me out. I'm just
Right.
like trying to figure out like yeah,
Yeah.
so that's why it's good to talk to different people, learn from different trainers as well. Yeah.
Right.
Yeah.
On the strategy part, I would say there's a few things I would recommend you look into. Um, Number one, like just kind of starting at the bottom, right? There's stabilized properties, like turnkey properties, right?
Okay. Yeah.
Um, Those are the ones where you buy it, everything's already ready, it's already
Mm.
rented, you don't really have to do any work, it's in good shape. Um, Sorry, my thing is dying here.
Oh no. You
Um,
need battery power.
it, yeah, I've got a little gimbal here. I'll show you.
Oh yeah, Ken was the one who showed me the gimbal. He's like, just get it second hand. It works really well. I'm like, okay.
Yeah, it's like $30.
I bought them in Taiwan, not gimbal, another version, and it's just like when tripods don't work, you're just so frustrated because they don't click, they don't like do this the auto switch thing. Yeah.
Yeah, I know exactly what you mean. Um, Geez. Oh yeah. So stabilized properties, turnkey properties, those are the properties people buy when they just want to park cash in real estate and they don't want to do too much. I'd say probably the best stabilized properties are like Class A, very nice area, growing area, like Dallas, Texas, or an area that's very high demand, Austin. Um, you park it there for a long time. You don't really have to think about it because the tenants are great and they don't tear up the property, and management's pretty easy. That's turnkey. Then there's value add, which is where a lot of investors focus on right now. That's where you're buying a property, you're improving the operations to make it more valuable, either through renovations, or you're lowering the expenses, or you're increasing the income. And through that, you're able to push the value of the property pretty significantly, to the point where you can either sell and flip it, or you can refinance and hold on to it long term without having any cash left in the deal. So that's like an infinite cash on cash return. So that's value add. And oftentimes you see people invest in that, and it's like what they call a class C area or a class B area. So like working class, or maybe like white collar professionals. Um, you know, in maybe secondary markets, or tertiary markets. So like, you know, smaller cities, bigger towns, that kind of thing. Those are kind of the locations where people invest in that. Then there's distressed, and distressed is where you have a property that is in extreme disrepair. Like it may be uninhabitable, it may be in an area where it's like a crime zone. It may be a property where it's completely vacant. Um, all of those are distressed properties, and they're a major lift. You can get a huge discount on many of them, but it requires operational expertise that a lot of people don't have. And so it makes it so that many groups just can't take it down profitably, because either they don't have what's called vertical integration, which is like you control the property management company and you control the construction, like crews, the construction management company, and you control the acquisitions, and you control like all the other parts of the deal, right? The more you can control, the lower your costs can be, and the more profitable these deals that are distressed can be for you. Um, so those are what I would call like the three like major classes: is stabilized, value add, and turnkey. So when Brian asks you like what's the strategy, he's probably talking about, is it already stabilized? Is this a value add property? If it is a value add property, how are you adding value? Or is it distressed? If it's distressed, how do I know the team can take it down? And what is the track record?
Right.
So
Yeah. It's correct. Thank you for that.
yeah, hopefully that's helpful. I kind of went on a rant, but
Oh, no, it's good. Like really good information. Just have to see which property I can acquire and then do any of the strategies. Well, I mean,
right.
each property depends on yeah what it is. Yeah. Yeah. I guess I just have to keep writing offers to find good deals. Because I actually did find a couple of distressed ones, and I was asking another person. I'm like, okay, well, where are we gonna find the funds? And then after the calculation, they're like, yeah, forget it. Because
Forget
okay, so maybe in Toronto, houses are around 1 million.
okay.
So, and doing renovations over the winter and all that stuff, maybe it's not value add anymore. that's why we're like, okay, we'll forget about it. It's not a good distressed property to like take over and manage, right? Especially it's a single family and yeah, yeah. But
Yeah, if it's a single family rental, I'd probably be like, no, no way. If it's a single family flip or I'm buying it and I know, I'm buying it at 500 and I know I'm gonna put in 200 and it'll be worth 1 million, I'd do that all day. Um, I think the I think the exit strategy informs a lot of what assets I'll buy. Um, if I'm looking to do a quick flip and I know I can get it at a great price, even if it's not a rental or even if it's not a asset class I'm usually, investing in, for example, like an office or a warehouse deal or like a self storage deal. If I have someone who's a subject matter expert in that thing that I can partner with and take that down with, then I'm way more apt to do that deal than if I'm looking at everything as just like, can I get cash flow out of this thing, which is kind of where I started. I was just looking for cash flow, but now I look for, can I add an obscene amount of value to this thing and then exit, or can I refi and like hold on to it long term?
yeah, I
So
mean,
anyway,
yeah, Toronto's more about appreciating markets, right? So even if we want to squeeze cash flow out of it, it's like it's a little tighter.
yeah,
Yeah.
yeah.
Well, thank you so much. Has been very informative and very very useful for my knowledge. Just have to
Good,
put it
yeah,
into action. Yeah. Thank you.
good.
And
Well, yeah, you got my WhatsApp. If
yeah,
you have any questions, if I can help out in any way, just let me know. Send me a message or we can hop
sure.
on a call.
Sure. Yeah. Just one last thing I would like to ask you is if you could give me, like a card, your handlings,
Oh
like
yeah,
social media contacts and this and that, so I can put it as an end card for this video. Yeah. Yeah.
cool, absolutely. And I can, yeah, I'll give you all my socials.
Okay.
Cool, sounds
Yeah.
good.
Yeah. Awesome. Thank you so much. Okay.
Thank
Have
you.
a
I'll
great
see ya.
day or a great night. Okay. Bye.